All right, ladies and gentlemen, this is going to be a fantastic video for you to chew on, for you to think about, and it's going to be massively important for literally everyone, but especially anyone under the age of 40, and especially even more in their 20s and early 30s. Massive. Now, if you guys have not already seen any of my other videos, yes, I talk about credit, finance, travel hacking. This is going to be more finance focused. This is going to be about the baseline, the foundation of the American financial system, how you need to look at it and how you need to understand it. But if you have not already, you can always like, subscribe, and hit my free community. If any of the credit or finance stuff interests you or relates to you, join the free school community. It's absolutely free, right? You can save thousands on your travel and completely leverage the system for yourself. But this is going to be something a little bit different. If you guys have not seen any of my other videos, if you guys don't know me that very well, I have done tons of research and I have my own experience, not only with credit in the banking system, but also the actual financial system, the Federal Reserve System, understanding currency, understanding what operates around the world, how the changes of our dollar and other currencies work, how the cycles work. And this is literally what I'm going to be talking about today. And it's going to be very important that you understand that what worked for your parents or their parents will not work for you. And I want to stress this because if you are in your 20s, if you're in your early 30s, the typical way of investing, the typical way of understanding of retirement and having money is not going to work the way that you think it is. So first, let's actually talk about what I'm talking about. So if you don't know, yes, we went through the good old shebang or the cocoa, and there was tons of money printing. We are living in unprecedented times in understanding that they are printing our dollar here in the United States to oblivion. And if you don't understand the financial system and you don't understand the Federal Reserve and you don't understand the monetary system, the whole plan is to essentially print that dollar until it runs out. That is the whole plan. It is backed by absolutely nothing. They got rid of the gold standard plenty of years ago, and since then they have absolutely inflated the dollar. And I'm going to show you guys some metrics. I'm going to talk about my opinion on it, and I'm going to give you some insight that I think you should chew on. And if you completely disagree, then absolutely blow up the comment section because it's engagement anyways, and I would love just some back and forth debate. Now, the first thing I am not going to really argue about is compound interest. Yes, I'm going to talk about the typical way of investing, put in the S&P 100, put in the index funds, put it in these funds, and don't worry about it, and you will retire. You'll have $2-3 million when you retire. Whoop-la, whoop-la. Yes, you'll be 65 and 70, you'll be hard to walk, and you'll finally have the money to use or pass on to your family. But that is not going to work. Although I will not discount compound interest, because compound interest is a fantastic tool that you can utilize. What I'm going to say is it's going to be important for you to diversify your approach to investing and especially take more risk with investing, because if you cannot take a risk, you are not going to make the big money. And if we are inflating the dollar at this point, you are not going to have retirement. You're not going to have the same advantages that our parents, your parents have. It just isn't going to be there, and I'm going to break it down. Okay, so let me share my screen so you guys can understand a little bit of things. I'm going to show you guys some graphics. I'm going to show you guys just some information that I have put together. And no, I am not going to put together a 50-page dissertation with all this data and all this information to prove it to you. No, this is going to be my opinion. Yes, there is some data backed by it, but I'm not going to sit there and do a 3-hour-long video to explain to you why I'm some mad scientist of the financial markets. It's just not going to happen. But you should be thinking about this in your own way, building your own self-awareness and understanding that this is happening whether you want to or not. You can't stop it. So as you guys know, you should very much be aware that the dollar, the value of the dollar, continues to be depleted. And that is because they continue to print and inflate the dollar, and they essentially just put numbers on a screen whenever the hell they feel like it. And we're going to bring up some examples of this. But this is a good graphic to understand the actual purchasing power of the dollar. You've probably noticed it with inflation. You've probably noticed it with your rent, with your food. People are making more money than they ever have, but they're also feeling the most broke that they ever have. It's going to be really challenging for anyone in their 20s and 30s to actually afford a house at this point. Mortgage rates are pretty high, even though I know they're not high compared to 25 years ago, but the purchasing power of that is not getting you much, and you have to pay way more. I'm out here in Florida, and I have literally seen rents go up double in the past 3 years, double. And I know for a fact that your careers are not going up double. your income is not going up double. And we're going to talk about why it's important that you should start thinking about not only creating content, building a brand, but having more control over your income by building a business somehow, some way, some shape or form. So take a look at this. The purchasing power over time has just absolutely depleted. Now, with that, right, we talked about printing, we talked about inflation. They print behind the scenes all the time. You rarely hear how much money they are transacting and putting into the ether, putting into the supply. So this is funny. Everyone is going, and yes, I'm going to talk about crypto because I think there's massive potential with crypto, but do not just throw all your money in meme coins. But the funny thing is, these scam coins are getting crazy. One someone just shilled me, 27 trillion in circulation, unlimited supply cap, only one node, 25% of supply minted the last 6 months, 1% holders own 30% US dollar, guys. The US dollar. So many in circulation. Over the cocoa, they printed exponentially a crazy amount. They are still doing that today, and they will because we are going through an election year. It is not backed by anything. It is literally just created at the Federal Reserve. The Federal Reserve is not a government-backed entity. Essentially, it's owned by some of the richest powers, the richest banks, and they decide what to do with the dollar. And they print it. And guess what? They work in tandem, of course, with the US government because they bail out each other, and that's why they do that. We're going to talk about the bailouts and the craziness of the bailouts. But essentially, yes, cryptocurrency, Bitcoin, at least has a store of value. Bitcoin will become a store of value just like gold and silver because there is not an infinite supply. Just like gold and silver, you have to mine essentially to find it and to get it. You can't just make it out of nowhere. Bitcoin is the same. It only has 22 million in circulation. You have to mine to get it. So it has a finite supply. It gives it essentially more value. With the dollar, when you can just add 5 trillion onto a screen and put it into circulation, that's not valuable. It doesn't hold value. So right now, as you can see, the dollar has just absolutely inflated. Our national debt has absolutely inflated. And that's why I included this. This was just a couple of months ago, signing $1.2 trillion funding package because of our debt. Because our debt has gotten so big, we are technically going to default on it. But guess what we did? We just added more money to the supply and just utilized that money to then not have to shut down the government, not have to shut down the reserve. We just made more money, made it easier for us. And they are going to continue to do that because there's no other way that we can get out of our debt. So yes, I think when it comes to understanding our money supply, you're noticing it in your daily life. But if you are not putting some type of action or taking some type of risk to put it in something that will gain you more value or store your value, you have to take, like, there is no Rari without the risk. You need to understand this. You are not going to be a multimillionaire if you do not take risk. Everyone who takes risks, not saying it works out all the time, but they need to be calculated risk. And I want you guys to understand that the typical path, make your money in a career, make your way up that career, slowly make, $10,000 extra every few years, slowly get into middle management, then by 50, get into upper management, and then retire because you have put a certain amount of money in your 401k, you've put a certain amount of money in your Roth, you put a certain amount of money in your indexes, and you don't have to do anything. You don't have to worry about investing because guess what? When you retire at 65, you'll have a couple of $1 million to sit back on. But by then, you're old, it'll be hard to do the things that you want to do with that money. And the value of that dollar today, 40 years from now, is going to be exponentially less. We have just talked about that. It's going to be exponentially less. $2 million then might act as $700,000 today. Seriously. Think about in a long time frame. If you are investing this way, think of a long time frame. What is that value? I get $2 million sounds great, right? $2 million today sounds great. But 40 years from now, no, it makes no sense. Think of it this way, right? Finite supply. We just talked about it. We're noticing it in inflation. We've noticed that we can buy less goods. We can buy a smaller house now, right? Everything that we're purchasing, we're getting less of. Shrinkflation. Now with Bitcoin, over time, it has increased, right? It has increased in value because it has a finite supply. We have the Bitcoin halving coming up here soon too, right? It allows you to purchase even more. Now, I'm not just saying go all in Bitcoin. I'm saying diversify your portfolio, take a little bit more risk in assets that give you more value. These are really good representations because I want to give you guys some visuals. Rather than me just blabbing my opinion everywhere, this is going to help you understand what I am talking about and what you need to think about and build awareness about. Now, let's talk about this, because everyone talks about inflation isn't that bad. I notice it in my daily life, but they're fabricated. They're completely fake. Back in the cocoa days, right, they took out many of the main factors that went into inflation. That included rent, food, gas, the things that we spend the most amount of on. And now they aren't even including them in the inflation numbers. So they're saying inflation's at 6 to 7%. But naturally, it is literally 12, 15, 20%. And that continues to go up the more that they print behind the scenes. And like I said before, Americans are making way more money than they ever have, but they feel the most broke they ever had because of this. So what you need to understand is what they're telling you about the inflation numbers is wrong. Don't believe what they tell you. They have taken out many of the major key metrics that they have judged inflation on over the last 50, 60 years. So when you see back in the 70s, back in the 90s, back in the early 2000s, when you see that inflation numbers were 8, 11, 15, 22%, that was with that included. Now they're saying, oh, it's 8 or 9%, and they're not even including the main things that you spend your money on. Understand that the inflation numbers they tell you are completely wrong. They're completely fabricated because they're trying to tell you a story that they don't want you to know. Boom, roasted. Now I want to talk about this because yes, we did go through a bank bailout when it comes to First Republic Bank back in 2023. Back in 08, when there was bank collapses, there was plenty of them. Washington Mutual was the largest one of all time, and then Lehman Brothers, which got a bunch of the headlines. It took them 7 to 9 months for them to bail them out with a new monetary printing policy. When First Republic, the second largest bailout of all time, the second largest bank collapse of all time, happened not too long ago, it took them less than a week to just add that money to circulation. Billions, multiple hundreds of billions of dollars was added within days. The difference, look at that difference. That's a 97% difference. It took them time to decide and cooperate and figure out what was going to work back in 08, 7 to 9 months of that. Now they're doing it less than in a week. Just what I showed you when they printed to not shut the government down because of that, they just did it within days. They just decided to. Understand that this isn't going to stop because the only way for them to continue to bail themselves out of this crazy debt is to just print more money. And guess who it affects? It affects you majorly. It affects you the most. Now, when it comes down to the investment strategy that I want to talk about is if you were to go the typical route of investing like your parents or your grandparents, you get a job, you put a certain amount into 401k, you put a certain amount into an index fund, into a Roth, that investment will not outpace their timeline of printing money and the timeline of inflation. So you may be earning 10%, but if you're inflating your money by 8% or 10%, you're not really getting any yield. You're not really making any money on that. Do you think that some of the richest, most powerful people are doing this? No, they're putting it in assets that allow them to actually outpace inflation. Right now, that isn't going to outpace inflation. And I'm not going to argue with the fact of compound interest. I understand it's important to have compound interest. If you want 50 to 60% of your investment strategy and your way of creating money for retirement or for your later years to be in an S&P, to be in a Roth, to be in a VU, to be in these index funds, that is the middle class blueprint. The middle class does this blueprint because they know that they can have a lot of money at retirement. But what is happening now? You hear it all the time. The middle class is fading away. They're trying to get rid of the middle class, because this is the blueprint that everyone follows. And if you follow this blueprint and you stick to a normal career, you're not going to be able to outpace inflation. You're going to end up being more broke, more poor, and it's just not going to work out. You're not going to have the money. You might be comfortable for the time being, but like I said, you need to look at it as a long-term time frame. A long-term time frame of 50 years from now, what is that going to be worth? So you need to understand that, especially if you're in your 20s, especially in your early 30s, you need to take a risk on these investment strategies because you are going to be either the rich or you're going to be the poor. The middle class is going to disintegrate and be kind of weaseled in one way or the other, and the people that take the most risk and calculated risk are going to get the most reward. So if you follow this middle class blueprint, that 2 to 5% raise every single year is not going to cut it. If you got a 5% raise and you made $100K a year, that's an extra $400 a month. And $100K a year is still like top 2%. Most people aren't making that. They're making, between 35 and 60 grand a year. And that's even less, $100 a month. And so that's not going to help you, especially when you go to the grocery store and you're already paying an extra $100 every 2 weeks for the groceries you're buying because of this situation. So I want you guys to understand that this method will not work. And And you can argue with me in the comments. Yes, I'm not going to argue compound interest, but I'm going to argue that even if you have $1.5 to $3 million in your bank account, 40 years from now, the value of that purchasing power will be half. We have exponentially printed, deflated, diminished the value of the US dollar and its purchasing power so much in the last just few years. This is why it's not going to work, because you're not going to be outpace inflation. You're not going to see the rewards that your parents or our parents have seen. It's just not going to happen. We're living in unprecedented times, which is exactly why I'm creating the video, because I think it's going to be extremely beneficial for you to develop a strategy and understand calculated risk and understand what is happening. And the more you stick onto this channel, you'll start understanding the different pieces of finance, the different pieces of the banks, how our monetary policy works, how our system works, right? What is central banking? What is the Fed? These are all important things because they affect you specifically. The government isn't working in your best interest, they're working in the interest of themselves. Now, this is important because everyone likes to listen to the news, let's just say that. And what the news tells you is not what they're actually doing. Now, they will talk about Bitcoin and these different investment strategies and say, oh, this isn't going to work. This isn't important. This is extremely risky. You got guys like Larry Fink, guys at JP Morgan Chase, talking about this stuff and saying it's not a good investment. The craziest thing is the biggest market maker in the world, BlackRock, biggest investor who manipulates the stock market. The stocks that you invest in is actually the largest holder of Bitcoin. The largest holder of Bitcoin. The biggest market maker in the world, worth trillions of dollars, hundreds of billions. They're not in it to not make money, they're in it to make money. So you need to follow and understand that the news tells you something different, because what you are considered is retail. What you are considered is retail. You are their exit liquidity. So what they want to do is they want to push a narrative so that you're not getting in when they are getting in. Now, when they're in, they're making the profits, because eventually they're going to start pushing a narrative. Yes, yes, yes. Get in now, get in now. And then retail, which is you, ends up getting in. So you need to understand what is happening behind the scenes, when it is happening, when it's a good time to invest, and then understand where you can pull your profits. And when everyone else is screaming, then you take advantage. When everyone else is freaking out, when no one is talking about something, that is when you start taking advantage. So when they're talking about it not being a good investment, that's when you want to invest, because what they're doing behind the scenes, like BlackRock, is they're purchasing to get that money, to make a profit. And that's their goal. Their goal as a business is to make a profit and make money. Your goal as an investor should be the same, but you need to put it in the right places. You need to understand what is happening with these big companies, because these are the companies that run and operate the world and operate the mass media, for you to understand too. Now, what I talked about is our parents. Our parents could run that investment strategy, and a lot of their opinions are going to happen because they have lived in the greatest financially abundant time in the United States. Yes, they had 08. They had one big little dip there. Look at that. Their standard portfolios have risen exponentially without any risk, without anything, any much work, because as they were investing, they had 20 to 30 years of compound interest built up. They had 10 to 15 years of compound interest built up, and their portfolios exponentially increased because of the money printing that we are now dealing with. So you might be just getting in the markets, but if you only have a few $1,000s, $10,000, $20,000 versus a couple $100,000, it is going to help them exponentially more than it's going to help you. Something to take note of. What they went through is one of the most financially abundant times of all time when it comes to an investment strategy. The people that also took the most risk during this time probably made the most money too. So you need to understand it is kind of a same scenario, but when inflation, when these numbers, when the money printing is happening and the value of your dollar is decreasing, this isn't going to be worth it. It's going to be impossible for you to be able to attain the same gains and attain the same value. And then think of it this way, if you're 20 or 30, you still have 30, 40 years of work. And like I said, the purchasing power of that dollar, because of what we're doing, because of the actions the government is taking with printing that dollar, for you to outpace it another 10%, if inflation's at 10% and another 10%, you have to take riskier bets. The standard, bet that they would tell you is to invest in the index funds, to invest in the VU. Don't worry about anything else. Worry about your 401k, your Roth, and your S&P index. This is what I'm trying to say. Just be aware that if you do that, it's not not going to work out in your favor as much as it worked out in their favor. The tides are not turning in your favor. The tides are going against you, and you need to figure out how to get a motor to flow into that, and so that you can make leeway, you can make headway versus falling behind. And this is what I would consider falling behind. Argue with me in the comments about it, but if you look and you understand the monetary system, monetary policy, what they are doing, what they are printing, inflation, these are things I have spent hours, days, weeks, months, years of my life learning about, you would understand the same thing. And that's exactly why a lot of people who do understand it are investing in other alternatives, and is exactly why crypto is one of those. One thing to note too, along with that, you won't have Social Security like them. You won't have retirement funds like that. You just won't. That's not going to be available for you. They're getting rid of it. Why would they give you that money? They've talked about getting rid of it for the last 5 years. There's no way they're going to allow to keep that happening 40 years from now. So when you think about your parents retiring, yes, they might be retiring with $2-3 million in their account, maybe even less. And I'm just using that as an example. They're also backing on the fact that they're going to get $5,000-$6,000 a month of retirement income, of Social Security income. That's not going to be available to you. So think about that. If they're retiring at 65 or 60 years old, they're banking on not only their retirement account, but also the ability that they can stack behind them with Social Security. They can live off of that, and then they can spend the rest how they want to. You need to outpace USD depletion and money printing. You need more control over your income, which is, it is important to then build a side hustle, build a side business, take riskier bets, calculated riskier bets, so that you can outpace it. Now, done with the screen sharing. That's what I want to talk about there. But the other thing I want to talk about is crypto as a whole. I'm not saying you have to get in. I'm saying you should put a certain percentage, 10 to 20% of what you have available into these investments, so that you can produce more yield than what we have talked about multiple times already. But the one thing you need to understand is everyone has a big question mark behind crypto. It's a scam, it's a sham, and I'll be honest, 98% of what you see in there probably will fall apart. But what most people don't understand is they don't look back on history. First of all, crypto is just another market, right? It's just another market, just like the Forex market, just like the stock market. They are companies that are trying to create change, that are a part of a new technology, and they are building that reputation. Now, with that, look back at the dot-com era. The dot-com era, right now, it would be hard for you to understand that the internet during the dot-com era was absolutely obliterated. People were like, this is a sham, this is a scam. The internet, we don't want it. We don't want anything to do with it. Then we had email, now we have iPhones, now we have iPads. And if the internet went out tomorrow, half of the world would shut down. We wouldn't be able to get through our careers, our jobs. We wouldn't be able to access our bank accounts. And now it has become a massive part of society. And guess what? That took 20, 30 years to develop. But at the time, when the dot-com era, when the internet was coming about, everyone said the exact same thing that they're saying right now when it comes to crypto. The exact same thing. And guess what? You've probably noticed OpenAI. You've probably noticed machine learning, AI technology. We are moving in to this very technological world. And what do you think is going to take over that technological world? For example, NVIDIA, GPU, all of these things with data onsets that cost a ton of money, a ton of energy to create. Now, the great thing about the blockchain and Web3 is it actually minimizes that. There's also security stuff. Why would you have to go to the bank to take out $100,000 7 days before? Then they want to make it split payments. Then they want to understand why you're sending it, who you're sending it to. It's an absolute rap show when you have to deal with the banks and trying to take their money out. And that's, for one, first of all, they don't hold that money. They rarely hold any more than 1% of the actual reserves in cash, so they need to understand how much money they're giving out each day. That's why they have all these questions. But on the blockchain, on crypto, you can essentially just send that money to whoever you want as you please without any jurisdiction. So security and that side of things, ease of access, ease of actually having control over your funds is massive. But the blockchain allows them, when it comes back to NVIDIA and microchips and GPU servicing, it is much cheaper on the blockchain. And this is where AI and technology is moving, as you can see when it comes to gaming, when it comes to metaverse. Yes, look at this. Some of the biggest companies in the world are changing their names to something that involves AI. Facebook changed their name to Meta for metaverse. So when you see these things changing, understand that there is obviously a movement that is going on here. and you want to be ahead of the game. So with that, I want to bring back the dot-com boom scenario. When the dot-com boom happened and everyone was screaming scam, sham, all of this information, look at the companies that were created in the dot-com boom. The Microsofts, the Apples, the Googles, Amazons, there are only a few giants. And that's exactly the way that I look at the crypto market. Yes, 98% of them are probably going to fail. They're probably not going to be good investments, but you should take advantage of them when it's hot to then make money off of them. Calculated risk there, but at the same time, there are still going to be the same amount of companies because this is a new industry and it's obviously taking the world by storm. It's obviously needed. You can see that it's right on the pavement in front of you. People are taking AI. They're utilizing machine learning. They're utilizing AI. They're utilizing the metaverse. It is a part of what is going on. And guess what? There are going to be companies just like the dot-com boom that come out of it. And this is going to create a whole new industry and a whole new path to wealth, a whole new path of new creators, of new businesses that are going to transition this world that we're living in. Like I said, we're in unprecedented times. So just like the dot-com boom, 98% of those companies, yes, the dot-com boom was the stock market. It is a familiar place that you feel safe with, but they all failed. Majority of them failed. And it's the same exact scenario, just put it in a different market. And when these regulations start coming, which they already have, we already had Bitcoin ETF approval. We already have BlackRock, the largest market maker on the stock market, one of the largest market makers in the world, highly invested in Bitcoin, in the cryptocurrency market. You gotta read what's between the lines. I really wanted to make this video because I'm passionate about it. There are things that I understand. You can absolutely disagree with me in the comments. I would appreciate a like though, and a subscribe if this is types of conversations that you're interested in, but I want to make sure that you are looking at these things and not just letting time fly by, because the investments and the calculated risks that you make now are going to pay exponential dividends. You want to be ahead of the curve. You don't want to be behind the curve. It's going to be a lot harder to swim upstream than it is going to be swim with the stream. We want to be those people, and that's why I'm talking about it. So you need to think these things, do your own research, understand the financial system, understand the monetary policy, understand the Federal Reserve, understand interest rates, understand that the dollar is backed by nothing except for the United States government, which is backed by essentially the Fed, and they're just going to print money to oblivion. We're also in a political race at this point, which every single year the markets during a political race technically rise because they want to print money. They want to make you feel that things are safe. They want to give people money and make them in good seasons. They don't want to have riots, anything like that. But this is just a part of the process. The more you understand it, you can make the calculated risks and put those risks and investments in your favor. And now I do want to mention that starting your own business or creating your own business and creating a little bit more financial abundance can be absolutely jet fueled, can be skyrocketed by utilizing the bank, by utilizing credit, by utilizing the advantages that the system provides you on the business side as well, massively on the business side, not the personal side, to skyrocket your potential wealth by building your business, by scaling your business, by creating opportunities, by creating investments. Credit is massively important, and stepping into the business side of things and having that information on how you can literally utilize the bank's money, not your cash flow money, not the money that you are utilizing to live, but utilizing the bank's money, because guess what they are doing? They're utilizing your money to invest and make money. So you might as well utilize their money to do the same. So it can be rocket fuel if you have the right principles, if you have the right information and you put it in the right places. So yes, credit is absolutely related to this. Credit is absolutely related to finance. And I wanted to bring this up so you guys had the opportunity to understand that even though this is talking about finance, talking about the monetary system, credit is still directly correlated to this information in a way for you to actually utilize it to your benefit, to improve and increase your financial means in a certain direction. And I'm not saying do not utilize it to throw it into crypto. I'm saying utilize it to get the right information, to expedite it, put it in the right investments, build a cash flow vehicle, build your own type of business to be able to do so. So really, this video is to just inform you. let you understand what is going on, give you my opinion on it. You can disagree with it or you can massively agree with it, which I think you should because it will help you out when you have an open mind. You can have an open discussion. But as always, feel free to hit the like and subscribe button. If you haven't subscribed, just subscribe. And if you haven't joined the free school community, it's absolutely free and you can learn all about credit, finance, travel hacking, points and miles, how you can save thousands, have amazing experiences, travel the world, leverage the system to your benefit, build your business, because I think creating your own income and starting some type of side hustle, building a brand, creating your own business is going to be exponential because you have control over your income versus someone else paying you and only dealing with a 1 to 2% raise, unless you're in sales of sorts, because then you can control your income a little bit there. But still, guys, that is going to be the video for today. I appreciate you as always. Let me know if you have any other questions. Hit them in the comment section and let me know if there's any other video ideas and if you like this one, because this is a little bit deeper. This is a little bit more woke, as you could say, but I love talking about just the overall financial structure of the world. And that is it. Talk to you guys soon.